Good afternoon and welcome to NYFP. This afternoon I'm joined by Kenneth Polcari of ICAP. Hi Kenny, thanks for joining me today.
Hi, how are you? Thanks for having me.
Well, on this Monday afternoon, we're seeing that the major stock averages are all lower by over 1%, and the S&P 500 has also fallen below the 1300 level. But we're seeing downward pressure from all sides. What are you most concerned about?
Continue to be concerned about the bigger global macro issues. You know, they haven't gone away. We've been talking about it for a couple of months, whether it's the European debt crisis, whether it's our own U.S. debt crisis, debt ceiling, that whole negotiation, whether it's just a view of, what does the future really look like? Jobs, housing, I mean, the whole, you throw it in there, it's all in there today.
Well, looking ahead to the upcoming trading session, which is Tuesday, we will be getting results out from Bank of America. And in today's session, shares of Bank of America are lower by over 4%. Could you tell me your take on what we're seeing in that stock today?
Well, Bank of America, you saw what the news was, right? They keep getting hammered on mortgage delinquencies, and so they've got to come up with another $50 billion in terms of capital. So that's not very encouraging. It's not encouraging to the investment community. It's not encouraging to Americans in general, and certainly not a story that Bank of America would like to tell. So that's where you see the pressure on Bank of America. You see the pressure on, certainly on the whole market, but financials certainly coming under pressure as a result. So my concern has been that the macro reports that we've been seeing have not been good. They've been flat to mixed at best and really tending to be negative. And so I think, once again, we're going to test a 200-day moving average.
Okay, Kenny, last but not least, so we're seeing financials lower and safe haven demand for gold. And today gold has soared above 1605 an ounce, and that's quite a move.
Right.
But where do you think the opportunities are right now?
Well, isn't that interesting? We've seen money move into gold because people are very nervous about the global situation, not just U.S., but about the global situation. So people are hedging their bets. I do think, though, you have to watch and you have to play it very cautiously. I think you have to watch and see if the market trades down and holds at the 200-day moving average. That's going to be the key. I think you have to kind of let it churn until it gets there. Once it gets there, I think then you reassess. I think earnings will continue to come in kind of as expected. You might get earnings that are a little bit better, but in terms of as long as the global macro picture continues to be concerning, no matter what the earnings are, they're going to, the market's going to take a little bit of a hit. I think when people need to raise cash, they come straight to the equity market because it's easy to do that. So I think you have to watch, but I think the opportunity is going to be once you see where we stabilize, and I think that's going to be back at the 200-day moving average.
Okay, Kenny, as always, thank you so much for weighing in on all these topics.
You're very welcome.